So, Matt, go ahead and share a little bit. Um, Bring them in the ballpark with,
Yeah.
the possibilities here with back testing
Yeah.
and automation.
I thought we would just do a simple vertical spread since you're talking about managing vertical spreads. I thought we'd just do a simple zero DTE one and hit on a couple things
Yeah.
because as somebody noted, it's been a challenging market to trade, right?
Mm.
The way the VIX has responded in the intraday movements, it's just been dicey, especially coming off holidays where you have a couple weeks of just kind of uh, unique times with the volatility and the liquidity being kind of different during the holidays. Can you guys see my screen okay? Can you see me? It
Yeah,
says the
perfect.
begin. Okay. So I just thought this would be a real simple one. And all it is it's a selling a put credit spread, PCS on the SPX, and we're doing a five wide here, and we're it's not managed at all. It just expired, and I intentionally didn't run it up through today. I showed this last a couple months ago, and it's part of the illustration here. But when you look at it, basically what we're doing is we're giving it a range from open after open until middle afternoon, 2:15 every day but Thursday. And if VIX is up overnight, and we move above the 30-minute EMA, then it opens the trade. And it's a what we would call a ride or die. So it just goes until the end of the day and it's cash settled. So can you guys hear my mic okay? Everybody hear my mic okay?
Yeah, I think,
Okay. Sorry, somebody said they couldn't hear me, so I just want to make
yeah,
sure.
someone can't hear. Maybe they sign out and sign in.
Yeah.
Yeah, maybe.
So we look at the trade log here, and you can see that you're getting, not a great amount of money, but you win most of the time, right? And so this backtester is very fast and powerful. We can change 20 delta. This is just literally a random number. But what I thought would be interesting, the first thing we'll do is we'll just take the last time or we'll just do this last 90 days. It's going to be about the same date. And this has been a prop roll back test for years now. Last 90 days, this is how a lot of back tests look, right? They just do. It's just been a tough time. We can model this. If we click this button here, model this test, that will bring up the integrated modeling tool. And you can see if we put one of these on right now, we'd be about 30 points below the market and a five wide. So, and if it expired worthless, right, you can see exactly where the break even is, take it through the model, look at it. You can add Greeks. Now, this is a put credit spread. So, like, you probably aren't too worried about some of the Greeks on a zero DTE put credit spread that you're just going to hold till close, but that's in there. And we can go back and look at this over various time frames. So, if I back up here, the other thing we can do is automate it. So if we wanted to trade this, we could automate it. We could put it on a account, turn it active. This is a demo account, but literally that one button I clicked automate it, I could click save and it would create an automated strategy for me. So uh, it's been a tough it's been a tough time to trade. And a lot of folks in our community are zero DT people. We also have a lot of people doing directional plays as well as a lot of time spread people. So calendars, diagonals, and also a lot of people doing butterflies and long condors as well. And I would say most of those people have had a little bit, the last 90 days have just been treading water for a lot of people or a drawdown for other people. So, Dan, is there anything else that you want me to show or just maybe run a different back test here?
A
Kind of show people?
couple things, Matt. If you maybe just so people can get used to, because I mean, folks, I want to just give you my thoughts. You know,
Yeah.
been a lot older than Matt, so I've been. Yeah, that's the only thing you say. You're more experienced. Uh,
Wiser, Dan. I
yeah,
think
why
we're
is it
going for
older?
wiser.
Older is it? Yeah, but the thing is, I wish we had something like that. I mean, my goal in the next year is to be totally automated on Options Omega, and just because I think it's got the back testing has all the good parameters that you can, risk management stuff you can do. and it's going to stick with the trade and it's going to automate it. Matt, a couple things I wouldn't mind you
Sure.
bringing up is maybe walk through the parameters, how you set up the back test.
Sure.
And then second, maybe add just okay, if you're doing a put credit spread, just maybe show them an example of one rail, like, hey,
Sure.
if it goes down, that's your risk on a put credit spread. What could you do? Like, let's say you're working and that you can have something in that makes sense to
Yeah.
do it. And then
So
once you get one up, then maybe the last step would be to show, okay, hey, we got something we like. Let's just say, what if I want to automate it and just give them
yeah.
a feel of what that world looks like for those who've never seen it? And folks, I want to just tell you one thing is Matt, before he jumps in here, one other thing. Every morning, Monday through Friday, there's an OO show at 8:40 Eastern, 8:45 Eastern. And it's generally Troy, one of the other co-founders, Matt, and myself. Rusty, the third co-founder, will come on Fridays. And it's something you can just, it's free. If you go to Options Omega YouTube, you can learn a lot about this. They usually share a back test with you. And then if you look, they also have, I think, 3 or 4 shows. Is it 3 shows on Tuesday?
Yeah.
Options Omega YouTube, and I think that'll give you a feel of this. But yeah, I'll let Matt give you a few more uh, things that gives you a feel of what's going on here.
Yeah. So oops, I've got to do one thing. So there's a bunch of rails and different ways that you can put protections on the back test. So what I did was I picked a intraminute stop loss. So this is going to simulate, it's a way of simulating a resting order at the broker, and it's probably going to make the back test worse. But what I did was I put in a simulated stop loss, and then to make sure I'm getting enough data, it's using all the data from that 0 day chain to see if we would have gotten stopped out. So it's using the NBBO and then the actual trades. It did exactly what I expected, which is it made this back test worse. The reason it made this back test worse is because you're on a 20 delta 5 wide, right? Those tests are, you're not getting enough premium. So even though we're still winning most of the time, it's basically this is what I would call a Sosnoff trade. Dan,
Yeah, yeah.
this is a trade that a broker loves. You're not blowing up your account, but you're not even paying for dinner. So rail, a couple questions. So a rail is just a way of managing the trade, right? So there's all these different parameters in here, and I know it looks like a lot, it looks overwhelming, but there's a lot of different ways that you could the manage the trade. So I chose an intraminute stop loss. So this is using all of the trades throughout that day, all the historical data to see if this would have gotten stopped at. And I just picked a 200% stop loss. We could do other things too. Since this was a 0 day spread, what a lot of folks do on 0 day is use a resting market order. And this is the cleanest way of simulating a resting market order, right? In a back test. So that's why I picked that. There's other rails too, though. You could use a delta exit. That would be a common thing. And let me show you a different test that's using a delta exit. And let's find one that's completely different. And I've got, you guys want to see a time spread? I can bring a time spread up here. I was playing with one earlier today. Okay, perfect. So this is a time spread. It's a totally different type of back test. This is a 4/7 double calendar. And let's run this just the last 90 days here. And I'll show you this because I think this is one that looks like a lot of trades. So it's only traded 4 times. Let's run it a little bit. Let's run it back like a year and we'll get a few more data points in here. I
And
think
a
this
four
one's
and a
so
4/7 would be, folks, if you put it, what day is this put
yeah,
on?
so you're putting this on a Monday, end of the day, and you're making sure there's enough juice in it, right? So the short long ratio has to be 0.75, meaning the value of the shorts have to be three-quarters as long as the three-quarters as much as the value of the long. And then to exit it, these are all rails here. So we've got a profit target, okay? We have an early exit, and we're exiting one DTE before at 2:30, or we're actually exiting at 229. So we get out before any news at 230. And then we also have an exit if the if the short long ratio totally collapses. When you put these on, now this is going to look different because it's a 4-7 right now is a totally different setup than a 4-7. But if we model out a calendar, right? If you
Hey, Matt,
look
one
at,
second. So this would
yeah,
be if it's put on Friday, but
it's
what day
put,
is it
this
put
one's
on
put
Monday?
on Monday.
So you're selling Friday and
No,
buying Monday?
yep. So I'm just giving you a quick model here just to show
Yeah,
this point of when you put on a time spread, what you want is you want the time spread to expire,
yeah,
your short to expire or be near expiry. You want to be in one of these profit tents, right? So
yeah.
that's what the short long ratio does. It prevents a sag in the tent in the middle. And then the other thing we have is a leg delta exit. So if we go into the back tester here, and I know I'm going fast, we've got a ton of documentation, help resources. We have a boot camp. We've got 300 videos on this backtester. There's plenty of ways if you want to dig into any concept. But basically, what we're doing is we're going to use the backtest to get out if the put leg delta goes above 70 and if the call leg delta goes below -70. So if we go back here and look at that, in the back test, we'll see if we've had any of those exits. Okay, we have to go all the way back to Monday, August 20th or August 18th. That trade, which exited on the 20th, it got leg delta. So what does that mean? Well, we put this spread on and the puts were at 69.30. Sorry, a little bit of dyslexia here coming through for me. 63.90
Yeah.
and the calls were 65.30. And what happened to the trade? Well, only 2 days into the trade on a 4 DTE 4-7, the market apparently dumped, and we dumped a little bit of 100 points from open of the trade and blew past these short legs. So the back tester got you out 10:47 in the morning. We can even look at a trade replay and see, yeah, this is exactly what happened. Let's get rid of the VIX. You can see exactly what happened. The market is in blue, the trade's in yellow. So as the market goes down, the trade just followed it right down along and exited. So this is an example of a back test that has these rails, right? We've got a short long rail, we've got a leg delta rail, we've got an early exit rail, which also can help prevent both of these other situations. And then we've got a profit target. And as you can see, this thing does hit the profit target in a not irregular fashion. Like it can hit the profit target. In fact, it's only gone on twice this year, looks like. And 2 times ago, it had a really nice winner at open, actually on a Thursday. It would have closed for probably above your profit target. And we can look back and see that in the trade replay. So let me see if we have any more questions. So that was a very long answer for you about what a rail was. So hopefully, can you automate in a demo account? Well, there's no paper trading automation if that's what you're asking. Uh, the automation is only live. We're hooked up to Tasty Trade, Schwab, and Tradier currently. So,
And
and
Matt, could
the
you show them how easy? Let's just say we,
yeah, if
uh,
you wanted to automate this
because this
one,
trade doesn't kick on till Monday. So
yeah,
if Matt wanted to automate this
I
live,
would literally just click this button right here. Click this is active, pick a brokerage account, and hit save. Now, you can do a lot of other stuff. So if I was actually going to do that and get granular, some of the other things I would do, I would give it a little bit of a more relaxed entry. So I'd give it 5 minutes to enter, and I would change it to where the system's going to put a limit price at the mid, but that's configurable how you want to do it. So I would probably give it a 5 cent offset. So if the mid price was $10, I'd say, hey, start at 10.05, and then every 10 seconds, let's adjust 5 cents. Okay. Just
yeah,
to try to get in a little more relaxed way. Conversely, on the exit, what I might do is I might leave the normal exit about the same every 10 seconds, adjust the price 5 cents. But what I might do is I might add an execution override. So if we're above or below delta, I might signifying that above or below delta might be a situation where I want to get out a little bit earlier. What I might do is put a negative offset and just say, hey, every 10 seconds or every 5 seconds, let's do it like this. Every 5 seconds, adjust the price 10 cents. And what that would do is in a below delta type exit or an above delta type exit. And actually, what I'd probably do, because typically with these calendars, depending on when they are, a lot of times you might have more worry about that above delta condition than the below delta condition,
Right.
especially when you look up we're at a 25 delta on this and a 15 delta on the calls. So if we get to the calls, we're at a 15 delta, we're usually pretty happy. So what I would just do is something like this, probably. And if we had a above delta condition, maybe have the automation tool exit a little bit more aggressively for me. So, another question: how do you determine a profit target? Well, on this, this is a debit trade. And so what we do is we just take your debit and then you do 30% of that. So if you look at it here, here's a debit for 680. So what did the profit target do? Well, we just take, I don't know if you can see the calculator on my screen, but I brought it up for you. So we just take 680 times 1.3, that's $8.84. And 84 cents. And as you can see, that's the profit target right there. And I have something turned on in the backtest cap profits to make it a little more robust. And what that's going to do is simulate a resting order, like a resting limit order in the back tester. If you have a resting order at 885, you're probably not going to get filled much above that. So that's why it filled me at 885. So that's how we determine a profit target on a debit trade like this, kind of the standard way. How do you set up your exit to prevent slippage or any market gap, just to make sure you can exit any trade? That is such a good question. And Jamal, we could probably do a 2 hour webinar just on that, to be honest. I would say that is completely dependent on what you are trading. And slippage is a fact of life. If you figure out a way to totally prevent slippage, please let me know.
Yeah.
But there's that the automation tool can do it just about any way you want. So you can do it with if it depends what you're trading. A lot of people are trading vertical spreads, right? Where they only have a stop on the short leg and it's a resting market stop. So you can do that in the back tester or in the automation platform. You can do a resting market stop and then you're just going to get whatever slippage the broker gets you. You can also we have 1 second exits on 0 DTE in the back tester or in the automation platform. So a lot of people will use the automation platform and it'll do a check every second to see if your stop loss is violated. And then again, you can use there's actually a lot of things you can do. You can have an exit progression. You can have an exit and then send a market order. There's a bunch of things. Can I connect a Canadian broker like IBKR? Not at this time. IBKR doesn't, the only APIs they have for web apps like this are for people who are financial advisors. We're not a financial advisor. And right now, there's not a ton of brokers in Canada. I know Tradier and Tasty have both been public, especially Tasty, I think, about trying to get into Canada. Haven't heard anything on that recently. The last thing I heard was that they were very close and then they pulled the plug. So
Mm.
I'm not sure about any Canadian options at this point. Unfortunately, I know Quest Trade is out there and they have an API supposedly. But yeah, I think I'm trying to see if I got all the questions. Any other questions?
Let me see. Oh, so
Yeah, we're not set up with interactive brokers. Again, to do interactive brokers requires a web app like this to be registered as a financial advisor. We've talked to them several times. We're still kind of talking to them now, but as of right now, no to IB. So again, a
you
lot of
can
our
hook, what are the ones you can hook up again, Matt?
Schwab, so Toss,
Yeah.
and Tradier and Tasty. So
Tasty. Okay.
I think most of the IB questions I've heard are like more geographic questions. If because IB is like maybe the only person that is available in their geography, but there are a lot of international users who can connect to those other brokers as well. So
Mm.
yeah.
Well, yeah, hopefully, folks, you got a good. This might have been a little overwhelming. What I would suggest is, again, a couple ways to start. I think that's the wave of the future. I mean, I wish they had this a long time ago because, I've been teaching for 20, 25 years, and, you know, most of as far as, if students, maybe had trouble getting consistent or something, a lot of it is they weren't consistent and their losers were bigger than they wanted them to be.
Yeah.
Maybe they didn't keep up on it. The great thing with a back testing, I'm just talking about this back testing too. I'm not, that has very good risk management. All the risk management things that I think about, they have in there in the tool, and you can use these, and it will do a lot. I hate to say this, it'll do a lot better job trading than you will, right?
Yeah.
And it'll do better. And it's just
Well,
a little bit of a learning curve learning it, but I mean, it's I'm not good with technology, but and I had some help from Matt, but you can go in there, folks, and you can get they have some I believe it's free. Matt, about the you want to tell them about the Option Omega Boot Camp?
sure, sure. And I want to talk for one second about automation too, because we came out in 2022 and the automation platform, it's 2026 now. I was the first user and I started in 2024. It's almost 2 years, right? And I see a couple more questions. I'll answer all these questions here in a second. Keep the questions coming. I'll run through them all. What I want to say about the automation is it was a game changer for me because even as somebody who helps design and shape the software, once I started automating the gap between my back test, like the gap between my back tests and my trading wasn't that the back tests weren't reflecting the market. They were accurate. The gap was me. And that's what automation helps with. So I had a trade close today and I looked at it this morning and then it closed at some point. And I don't have Tasty or Tradier to all send me alerts or whatever. I know it's going to close. And I looked a couple hours later and it had closed. And I spent zero time thinking about it because I knew the automation platform had it. So
Yeah.
it removes that emotional thing. So, okay, a couple questions. Simulated trades without a brokerage account. We do not have that. There is no, that'd be like paper trading. There's no paper trading. You have to have a brokerage account. Can I automate a combo trade which has five legs, calendar, and butterfly? No, because there's no broker that will take that trade. Now, what you could do is you could put on two strategies at the same time. The platform with automation, you have up to 100 opening executions a day. So you could put on strategies that went on at the same time and enter multiple strategies in the same minute. What is the subscription fees? Great question. We've got a couple different tiers. So there's one tier that's just modeling, a tier that's just backtesting, a tier that's backtesting and modeling, and a tier that has backtesting, modeling, and automation. So it just depends what tier you want. And Dan has a discount code for you as part of his community that is 50% off your first 12 months. So you can get in very affordably. Also, just for backtesting and modeling, there's a 7-day optional trial. If you want to try it out, you can. It's optional. You don't have to do the trial, but if you want to try the backtesting and modeling, that's on the website as well, optionomega.com/register. Just pick a trial option when you go check out. There's no trial for automation because it's a little more serious. So the automation, there's no trial, but there is for everything else. So,
All right.
um, any other questions or anything I can help with?
Yeah. If there's, um, I think it's well, good.
Hopefully we got them all.
Yeah. And if any other uh, questions, folks, you can send them over to Options Omega. If you send
Yeah.
it to me, I will get it over to Matt. Sanjay says so. Before I put on actual trades, I can do back testing.
Not only can you, you should, you should do back testing. So there's people that just have the back testing subscription, But if you hop on our Discord, we've got a couple thousand people in the Discord and people who have traded with OO backtest for years. We can help you dial it in because it's a little bit, the system is so, uh, there's a lot to it. We have a ton of resources, but one of the best resources is the community. And if you have a type of trade, I've never seen somebody come in with the type of trade that somebody in the community hasn't been able to help them with. Like, hey, I'm doing a 30-day range bound butterfly. What are some of my slippage settings I can dial in,
Yeah.
etc. The Discord address, just go to optionomega.com, click on the Discord item icon, it'll take you right there. So you can, here's the thing, you can join the Discord. You're only going to see the channels if you have some sort of verified subscription. It takes like a minute to verify, and you can see the support channels because that Discord is staffed. So there's like 5 or 6 people who answer support questions. So if you have a question about your back testing or your live trades, there's people who literally it's their job to answer those questions. So that's where we do all of our support. It's much faster than email. So again, to get to Discord, just go to optionomega.com, click on the Discord icon, that'll take you there. And actually, Dan, I can let me pull up a video if people are interested in the Discord. I
Yeah, that'd be great.
can link it here. This is a 1 minute video showing you how to join the Discord if you're a
Oh,
subscriber.
and
Um,
one thing I just put in
there you go.
under me, you can see there, folks. I put in that's our link to get a discount for Option Omega.
Yes.
So you can see that.
Yes, and that's 50% off your first 12 months, any of the tiers. And you can, let me answer one other question. You can start, if you just want to start with backtesting or modeling, you can start with that. And eventually, if you want to add automation, you can add automation. And as long as it's within the 12 months, that discount will carry over. Can you backtest and automate PMCCs and covered calls? No to covered calls, yes to poor man's covered calls. So, yes, you can backtest. It's just options only. There's no shares in the backtester. So, any sort of option structure that you have, you can backtest. You can backtest up to 8 legs. You can also backtest a portfolio. So, if you have 20 backtests that you want to run together and see how they're doing, you can do that. It's very powerful and it's quick. You can see it over a number of years. The data goes back to 2013. And the other thing we've got, I'll just run through the tickers real quick. We're adding tickers now, like on a weekly basis. For years, we're predominantly SPX because we have so many people doing 0 day. So SPX, SPY, IWM, Qs, Apple, Tesla, and then we've just added Microsoft and Nvidia, and Amazon will be in the next couple days. So, any tutorials before you do the 7 day trial? Yes, we have 300 YouTube videos which show using the tool. Um, and we've got there's so many videos. It depends what kind of trade you want to do. But the easiest thing to do too, if you really want to learn, you can go to academy.optionomega.com. You do need a sign up for this. It's free, but you do need a sign up. And this has free classes on it and paid classes, but there's a free class called Backtesting Bootcamp about how to use a tester. And then there's also a free camp called Automation Bootcamp. And that is how to use the automation platform. Can you recommend before trail, say SPX? I'm not sure what you're asking, Sanjay, but SPX spreads and calendars, vertical credit spreads and calendars are probably the two most popular thing that people backtest on OO. So, does your modeling also allow you to show expired options? You can no longer model in another. Okay. No. Once the option is expired, no, it's not still modeled. Can I watch the 300 mentioned videos before signing up? Just go to our YouTube channel. Yes, you can. There's tons of videos. How do you join the Discord group? Bill, I linked a message at 1:36. It's a 1 minute video that shows you how to join the Discord group. Again, I just want to be clear about this. You can join the Discord group for free to see all the content in it. You do have to be a verified OO sub. But you can do that with the modeling subscription. The modeling subscription is 30 bucks a month. If you use Dan's promo that he just linked, it's 15 bucks a month. So the Discord itself is really good. So there are people who just are in the Discord for modeling and the conversation.
So
So
Matt,
that's
can I, so
yeah,
if somebody gets just the modeling with the discount through us and they're paying like 15 bucks a month
yeah,
with that,
yes,
they'll be able to get the Discord?
yeah, yep,
Yeah. I mean, I didn't, I'll be honest with you. I should know these things, but I
yeah.
didn't. Folks, I mean, to me, that's an absolute no-brainer for for the sense that to be able to watch, I've been trading for been around a long time because I'm old, older than a lot of people, but I'll tell you what, I've learned a lot. I've never seen a Discord as
It's
sharp
incredible.
sharp traders like
Yeah,
that. And you bring something on. I mean, these are world class guys. These are good, and I just think I think that's a good way to start. Get the modeling tool, and I'm going to be using that uh, in a few minutes. Go over some vertical spreads and stuff, but use that for 15 bucks a month, and then as you're learning the back testing and everything else, and seeing the videos, then you can go from there. But I think even standalone, when you think of a lot of people are at different brokerage firms and they're not happy with the tool, the modeling tool to me, and I'll show you in a couple minutes, or even if Matt brings it up, how quick, especially if you're trying to learn the Greeks, or if you're trying to, Matt, if you could real quick, if you wouldn't mind, just whatever trade you have up in the modeling, show how quick that you can
sure.
change some of the you know, uh, go a day in the future and
Yeah. So this is just an XLE long diagonal. So this is like the
quarterly.
what would happen if something happened, this weekend type thing. And can you guys see this okay? Um,
Yeah,
okay, perfect. So so basically this is just long. What I wanted to do with this was just something that had a long exposure, but maybe pay for the drag a little bit. And assuming we didn't go to oil, 200 oil, XLE is just an easy instrument to do as an oil proxy, and that way you don't have to worry about complicated futures options. XLE is cheap. It's just easy, right? So what I can do during this is if we got to move, let's say Monday morning, something crazy happens, right? So like Monday morning, and we bump up to the short strike 50. I mean, you could see that this spread would go from down $8 to up 60. If that happened, we'd probably also have an IV expansion, I would guess. Like if we went up enough, we'd probably have a pretty big IV expansion. And you can model the expansion. You can also model the IV between the different tickers. So if you thought that it's just gonna right now, the closer term IV, that this spread is in backwardation, right? If you said, hey, I think we're just gonna have a big expansion of IV overall, and that they're
that's
all
your
gonna
long option, right? That you're
yeah, that they're all going to go, but the back is going to catch up to the front, right? Or even exceed the front a little bit. You can model that as well. You can reset these. You can play with your views. You can just do a lot of things. If you wanted to fly this off, you could fly it off, right? It's super easy. If I wanted to, let's see, something. I mean, this is a diagonal, so it looked something. Hang on, let me. Uh, I'm giving you an unintentional demonstration of how easy it is to edit the
yeah,
edit the edit the tool. But there we go. So this would turn this. Let's see. Did I do that right? Nope. So we want to buy in a fly. Let's say I thought it was only going to go up a little bit. Do something like this, right?
yeah, balanced
So
flight.
yeah, so this would be like a balanced fly. As you can see, it's real quick. It adjusts on the fly. You can easily change your structure. Say you wanted to unbalance this fly and you wanted to make it to where if there was an event, you'd be covered to the upside. Well, you can do that as well. You can save these models, you can share the models, you can play with the chain, you can pick them out this way, you can pick them out that way. We can add the Greeks to it. So we can even see what's theta going to do over time with this spread. Well, here's what it's going to do.
Yeah.
What is gamma going to do over time with this spread? I mean, it's a 21-day spread. Do we worry about gamma? But then at the end, you might be a little more interested. Or what a lot of people do is they want to see delta, theta, and vega on an options play. We move through time. We can see how those different Greeks are going to change. And look at the bottom of the screen. You can see what's happening as we move through time to all those Greeks.
Yeah.
What is our theta doing? We're getting, if we don't move, we're getting, we're getting shorter and shorter theta, and longer and longer delta. I mean, it's really powerful. You can do a lot of different things with it, and it you can even turn off your P&L if you want to. So it's got this tool has it's got a bunch more tickers. So the modeling has pretty much all like your NYSE tickers and your NASDAQ tickers are on the modeling. The back testing, I showed you the tickers. The automation right now is just the original six that we had: SPX, SPY, IWM, Qs, Apple, and Tesla. So
Okay. And one thing I want to point out, if you just, as I mentioned, we have or Option Omega has some live shows every day. They have the at 8:40, 8:45 in the morning, and I'm on that one. It's the Option Omega show with Matt and Troy and Rusty. What's great about that is you're learning the back testing almost every show. I'm not going to say every show, but almost every show, Matt or Troy will share a, hey, this is a back test we're working on.
yeah,
So it's like a cook show. They're bringing you to the table. They're giving you a very good back test to start with so that you can, but the idea is that you take it and tweak it a little bit, make it your own, put a little effort into it. But it's all the help there for you. Um, if I can get up to speed on some of these, most of you are 1,000 times better on computers or technology than I am, so I would encourage that. But any other final questions here before I let Matt run? And I appreciate it. Uh, I'm glad we got through the problem with the mailer lights. So we got a few more people were able to get on here. I appreciate any other questions. If not, and again, if you have any questions, you think of anything, you could email me or Options Omega. If you email me, I can get it
yeah,
over to Matt.
yeah. You
And
can just email billing at optionomega.com and I'll actually get it. But just send it to billing or actually send it to welcome at optionomega.com and I should get that.
okay,
And if you don't hear back from me, you can hit me up on the Discord or Dan can get you in touch. But I really appreciate you guys. Those were really great questions. So Bill, John, Sanjay, Mark, everybody who asked questions. I missed a couple, but thank you for asking the questions. I appreciate it. Dan, if you want, I can hang around and just get off the stage here and hang around the rest of the webinar if you want, in case there's any questions at the end.
yeah, that would be fine. I think what
Okay.
I'll do, folks, because this was very good, and I appreciate Matt uh, spending some time on. I think what I'll do, folks, just to respect everybody's time, I might just go some ideas for maybe 15 minutes and then come back again next Friday and continue it instead of rushing through or keeping you guys extra long. I know it's getting Friday towards the end of the day. So, how many of you have another 10 or 15 minutes you can hang in there if I go over some stuff? Some of you have some time. Okay, I'll go over 15 or 20, and then we'll just pick it up next Friday on the credit spread. So, and again, thank you so much, Matt. All right, let me bring up the modeling tool. Um, 1 second. Option Omega. Um, all right. Am I sharing? Can everybody see the modeling tool? Am I sharing? Oh, not yet. Okay, one second. All right, one second. Um,
Dan, you can take me off the presenter if you want. I honestly, there's probably a way for me to do it. I'm not sure how to do that myself.
oh yeah. All right, one second. So let's see. Oh yeah, so if I go share, all right, and if I go, all right, can you guys see the option omega? Okay. So I'll tell you what I'm going to do just for today. I'm going to start with, I might just take the piece and I'll talk a little bit about managing. I might just talk about, I've gone over this before. How many have done cash secured puts, just sell puts in their retirement account? And if they get assigned on the put, they'll buy stock. It's part of what we would call the wheel. Many of you do that. Um, the wheel. And I might just spend a few minutes today going over what I think is in my opinion, my humble opinion, a no-brainer better alternative than the cash secured put, right? And please give me your feedback as I go over this. But I think I'll go over that today, and then I'll talk some management today, but then we'll get more hot and heavy in the credit spreads next week. So in the wheel, just to reiterate, and we'll go through. Let's just show there's two main trades. How many is not familiar? Anybody in here not familiar with the wheel? Anybody not familiar with the wheel? The wheel, yeah, okay. The wheel is, so let's get going here. Um, you can see my screen. I think I'll just do this real quick. This is the standard wheel. So this is the standard wheel. You guys can see my annotation, can't you? Can you see my annotation? All right. Disclaimers. I am not an artist. I do not draw well. So laugh quietly, not out loud. Okay. So this is the wheel is saying this is the standard wheel in the world of investing. And you'll start out on the top with a sell a put. You're just going to sell a put. And we'll go over this on the modeling in a second. I just thought a diagram. And there's better. Uh, one thing I want to tell you, I have on Monday, Wednesday, and Friday at 11 a.m. Eastern. Uh, I do a show on Options Omega for beginners, and generally Matt or Troy is on there helping out on there, and we've gone over. We spent a couple weeks on this, and so we have better pictures of the wheel we got on there. Uh, so let's look at this. You start with a short sell put. You take stocks that you like, right? These aren't stocks you like for 10 minutes. These are stocks maybe you like for a year, 2 years, or Susie's high school education. I'll tell you right now, we'll get into what stocks would you sell puts in. Tell me stocks, give me the names of stocks that you guys would buy 100 shares of today and be absolutely comfortable holding it for a year or two. Give me a group of stocks that you would buy 100 shares today in that you would be comfortable holding it for a year or two. Okay, these would be the type of candidates that I would consider doing uh, doing Matt had one, Sophie,
No,
SOFI.
SoFi. I saw somebody else say SoFi. SoFi is fun to wheel too. So I saw Jamal say it, so that's why I said it too. It's a great
That's
idea.
that's neat. So you start out with a short put in a stock you like, and some people just say, hey, you know what? I just want to get the cash. I want the cash flow. I'm going to sell an out of the money put, bring in $1 or $2, and I hope the stock never goes down too far. Uh, and generally, you might sell an out of the money put. Some people might pick the short strike by a 10 delta, 20 delta, 30 delta, but it's out of the money. And the idea is you just go every month and you have a good time and sell the put. Bob, did you put CBOE? That's a stock, right? I remember, uh, what's that? What's that trading at right now? I remember a friend of mine, Peter Lusk, who was a trader at the CBOE. I traded in the pit with him. And Peter was a longtime instructor for the Options Institute. And a lot of those employees got stock. And correct me if I'm wrong, Bob. I think it came out, would it have been, trying to think what Peter and those guys said it came out at, $20 or 25. Do you remember, Bob? I don't remember, but it was pretty cheap. But you would think the CBOE would be a, Matt, have you ever checked that out? That, I mean, because it's,
I need to. I pay him enough money. I should probably
well,
be an owner, own a couple shares, huh?
well,
It's a
and let's
good
say,
business model, Dan.
yeah, $29 in 2010. And let's face it, folks, you know, what has led in the last 3, 4 years, to me, in my opinion, the options revolution, why it's even got more pop, it's the 0 day. And I think like Options Omega, they're right in the heart of it because, it's the 0 day folk, that has really helped things because you're trading a lot. And I know the other neat thing I'll say is um, Option Omega started, you can back test now stocks. Some of the active stocks they're starting to add because now you can do Nvidia and Microsoft and some of the others. They have three expirations a week. So that's, now it's expanding from like the SPX and SPY to a lot of these stocks, which is pretty nice. But anyways, you start with a short put, and as long as, these are stocks you like. So if you have an up year, right? I mean, the last 3 years, right? We've been up about 20%. Most of the time, you're just selling a put and bringing in cash flow. But if we go along here, what if you get like last April? Um, did anybody have any cash secured puts on last April? Anybody? You say, Dan, what was April? April is when the market got creamed, right? We were down 15, 16%, and then it came back. Did anybody have any? But so short puts would be in if you're in a stock you like, right? So if the stock's at 100 and you sell the 90 put for $1. Well, as long as it doesn't go under 90 at expiration, whether you're selling 1 week out, 2 weeks out, 3 weeks out, 4 weeks out. So if I sell the 90 put at $1, stocks at 100, as long as we don't go under 90, you collect your money. If we go under 90, you're obligating yourself to buy the stock. So your short put, you get assigned, and then you end up with long stock, right? But again, you're buying stock at 5 to 10% lower than when you sold the put, right? You're selling put in a stock you like, the stock goes lower 5 to 10%. Now you're long stock. So what happens? Right away, or once the stock you like is going up, you sell a call against the long stock. What's that called? A covered right, a buy right. Anybody else call it anything else? Any other names? Buy right, covered right. You sell a call. So now you're long stock and you're short a call. And then the idea is, let's say it goes up and you don't do anything to it and you get assigned on your short call. So your short call becomes short stock. your long stock so they cancel out each other, and you start the whole process again. So excuse the bad artwork. How many at least does that make a little bit of sense? So you go from a short put, that's one strategy. Then you go into long stock. If you get assigned on the put, you sell a call against it, right? So you have two strategies here. This is your covered right or buy right, and then you have the short put. So that's all there is, two strategies. So we'll talk a little bit about today on the short put. Any questions on that, people? The poor man's covered right. Maybe I'll go over that a little more next time. Um, it's basically the same graph, but a poor man's covered right. Or let me just say this now. So this is the traditional wheel. And what I've done, and I've done a course on this. I have a archived, I don't know, 4 hour class on this or 5 hour on the all options wheel. I have not seen this out there. If you've ever seen an all options wheel out there, send me an email. I have never seen one. And just not that I don't know if anybody just had any desire to do it. I think they should. But so I did a course on the all options wheel. And all it is, folks, in a nutshell, is instead of a what are two reasons that I started an all options wheel? What do you think? What are two advantages? You say, what's an all options wheel? Instead of selling a put, if I'm selling a put at $3, right, in a $400 stock, you got to put up 40 grand to get the $3, right? That's not a great yield. So what I'm doing is just saying, hey, if I'm selling a put for three, buy a put at 10 to 20% of the value of the short put. So maybe buy a put at 50 cents, right? So instead of bringing in $3, I buy a cheap put against a short put, I'll bring in $2.50. And let's say the stock is $300. Would you rather folks bring in $3 and 30,000, or would you rather get $2.50 and put up 3 grand? Do you see where I'm going? So your margin requirements are drastically different, drastically, right? Like 10, 15 times lower, right? And so what does that do? Your yield potential goes up dramatically, right? Now, are there some logistics to get used to it? Yes, but that's the main thing. And then in a covered right, you're buying stocks, selling an out of the money call. What makes this expensive margin, again, if you do it in a $200 stock, it's going to cost you 20,000, right? So we're just going to substitute the long stock for a call option further out and sell a call closer in. So this, in the world of options, all options, this part would be called a long diagonal, a poor man's covered right, poor man's covered call. I think my friend Brian Overby called it a fig leaf. I think that's a neat name, right? And uh, these are great strategies. And then the instead of the wheel, you're doing a put credit spread. So, any questions on that? Question says, but don't you still have to buy the stock if the short put goes in the money? Has anybody else thought of that? That's a good question. So if you're short the put, so owner is saying, right, if you're short the put, do you still have to buy the stock if the short put goes in the money? And again, the other thing I'll say, and then I'll answer the question. Thanks for bringing up the question, is generally, can you do just selling puts or doing covered rights in a $5,000 or $10,000 account? Yes or no? Can you generally do short puts, the traditional wheel type strategies, in a $5,000, $10,000, $15,000 account? No, no. And even short puts, right? If you're selling a put, they want you to have up, yeah, I mean, if you're doing a $5 stock, but if you're doing a $100 stock, you'll need $10,000 in there. So, so the way I'm looking at it, you can do it in a small account, in a $10,000, $15,000 stock, and you can do all of the stocks that you guys put in that you would like to buy for the next 2, 3 years. We can do these long diagonals or poor man covered rights and credit spreads easily in a $10,000 account, right? You can do most of it in a $5,000 account. So, but the question is, but don't you still have to buy stock if the short put goes in the money? Does everybody understand the question before I answer it? So owner is saying if you're short a put, right? You sell a put, right? Don't you still have to buy the stock if it goes below your short strike, right? So let's just put an example here, just so we say, so sell one, I'm just making this up, uh, March 20, I think that's 3 weeks out, but uh, March 20, uh, 1 second, sell one. So let's say a stock is 200, sell one March 20, uh, let's say a strike of, we're at 200, let's say the 180, 170 put for 1.5. We'll use that as an example. Stocks at 200. I'm going to sell one March 20 put, March 20. So that's 3 weeks from today or so. 170 put, 30 points below the market at 1.5. So the idea is you're collecting one at $150. As long as we don't go under 170, you get the check, right? If we go under 170, you're committing yourself to buy the stock at 200 minus your premium of 1.5, which would be 198 and a half, 198 and a half, which is still $19,000. Does everybody get that? Yeah, you can use the strategy on SPY. Uh, absolutely. Does everybody understand what we're asking here? So the question is, let's take a scenario. We're getting close to March 20 expiration. We're 3 days before March 20. Let's say we're March 17, right? We're March 17, and the stock is $168, right? Stock's at $168. Question. You ready? We'll see who ate too much food for lunch or who didn't. What's the intrinsic value of this? So what did I do? And I'll answer the question. We're 3 days before expiration, March 17. The stock has gone from 200 to 168. How many have heard that term? What would be the intrinsic value? Stock went from 200 to 168. The 170 put, the intrinsic value would be the, I'm sorry, it would be the, um, where am I at here? 168, two intrinsic, but you collected, yeah, the intrinsic value, you're correct. The intrinsic value would be $2, right? The 170 put, we're trading at 168, so there would be $2 of intrinsic value. I collected 150, right? So it's worth at least two. But with 3 or 4 days left, would there be a little bit extra premium in there or time premium? So this is intrinsic value. Would there be any extrinsic value? Yes or no? With 3 days before expiration, we're trading $2 from 170 put, we're trading at 168. Would there be a little bit? Yeah, I mean, there might be, what would you say, 30 cents? I don't know, 30, 40 cents of extrinsic value. So this is trading at 230. Now, if we close under 168, what is your brokerage firm going to do? If you let it expire, what is your brokerage firm going to do? They're going to, Uncle Guido's going to get, what do they do to you? How do they do it, your brokerage firm? Do they send you an email signed from Guido Sarducci, say, put up money or we'll break your neck? No, you'll come in long stock Monday morning, correct? Right? You're buying 100 shares Monday morning at 170 bucks. Agree? Yeah, Tony Batista threatens me typically. Yeah. So, but that's if you let it. So now let me ask you a question. So let's face the worst fear here. I come in Monday morning and I have a $10,000 account and they send me an email, you're long stock, you bought 100 shares at 170, 17,000. What are they going to do? Will you go to jail? What are they going to do if you have a $10,000 account? What will they do to you? Will they punish you? Let's just say you come in Monday morning, you face the fear. What will they do? Anybody? In other words, is that an extremely stressful? Yeah, but let me ask you. I know the gentleman, Peter Klink, who's head of margins, all of this stuff at Tasty Trade. What do you think he's going to do? Margin. But let me ask you, could you, if they call you up or they send you an email, right? Do you have to put more money in the account? Yes or no? Do you have to put more dough in the account? You do. Let me ask you a question. When I see the long stock Monday morning, am I allowed under the laws of the Geneva Convention? Can I sell it out? Or they'll close it for you. Right. So if they close it for you, Jamal, are you in the penalty box? Will they punish you? Or will is the trade's done? No. So facing that fear, is that the end of the world? Right? Well, Sanjay says they will close and you have a loss. Do you know for sure if you'll have a loss? I mean, well, it depends on how, right, Sanjay? It depends on Monday morning. Does the stock open up a little bit or down a little bit? But again, you brought in a premium of 1.5. You might not be out anything. Well, if the stock tanks overnight, then you're very sad. But what if the stock runs up what if the stock runs up $3? Would you be very sad, or what's the word you would put after very? Then you are good. But the point, all I was illustrating in that first scenario is even in a small account, is the end result that daunting? The fact that if I don't want the stock, I could just sell it out. It's not the. But here's the other. What are other choices? Can you close that short put close to expiration when that extrinsic value is low? Am I allowed to buy in my short put? Yes or no? I am allowed to buy in my short put. So if I don't want to get assigned, I can buy that short put, right? Yeah. And even if you did a cash secured put, you're still down on that trade, aren't you? A little bit, maybe, depending on how far under the strike, you're still down, right? When you agree. But what I'm saying is this. Let's just run through this scenario. Could I, one of two things, right? I'm just throwing these things out. Could I, two scenarios for the all options wheel. In that scenario, could I buy in the short put, right? Could I buy in the short put, go get a drink of water in the kitchen, come back, right? As soon as I buy that short put, because I'm going to get assigned, right, in the next day or whatever, and buy the stock. Excuse me. and buy a call, right? Buy a call 3 months out, 8 months out, 2 years out. That'd be dramatically less expensive than the stock. And let's say I buy an option with an 80 delta. That means every dollar it goes up, I make $80, but I'm going to spend a lot less than the stock, right? It's going to be cheaper. Can I do that? Does everybody see what I'm doing here? I'm avoiding getting long the stock because it costs too much. Does that make sense? So could I buy in the short put and immediately go buy a long call, right? Or if you wanted to do the lazy man way of doing it, okay, the broker's firm gives me 100 shares of stock. They say, Dan, you got to have $17,000 in your account. I'll see you later. I sell out the stock, and can I go buy a long call? Uh, that's going to be dramatically less capital. Yes or no? Right? Face the fear. Tasty Trade gives me 100 shares of stock. I sell it out. I don't want to put $17,000 down. I'll buy an option in the money 6 months out, and I'll put down 3 grand. Right? Buy a leap. Yeah. So I'm saying, are these are these choices that I'm giving you? How many would say, well, you got to have 5 years of experience and you've got to be a rocket scientist to do these things? What do you think? How many think these are difficult challenges to overcome? Say no. Please say no. No, right? You can do that. So, anyways, here's what I'm going to. BWZ says, is it harder to roll a credit spread than to roll a straight cash secured put? No. And I'll just show you this real quick. Then we'll go. I mean, and I'll talk more into it next week. There's many ways to do credit spreads, but I'm just going to just compare someone who in their brain is used to a cash secured put. So if you look here, so if I go to option chain, give me a stock. What's a stock? Um, can you guys see my screen? Yeah, Netflix. Okay, let's take Netflix. Now again, Netflix is a little different, right? Netflix is at quite a day today, right? So I click Netflix. All right. Netflix has had quite a day today. It's at $95.61. Did anybody buy Netflix 3, 4 days ago? Anybody buy Netflix 3, 4 days ago or get long it? Then you're a happy person. All right. So here's the idea. Let's say we look at Netflix today. And again, I'm not judging after a stock is up $9 like today. I probably would rather go somewhere like Netflix, right? A stock, how many did anybody say, Dan, I don't mind buying Netflix 100 shares today for the next 2 years? Who would say, yes, Dan, I'd have no problem doing that, holding on to 100 shares of Microsoft for the next 2 years? All right, Attilia. So Microsoft is at 393, has not had as good last couple of weeks as um, Netflix. So so let's go in a typical cash secured put. Maybe I'll go again. You can go 7 days out, sell a put, go 14. Let's just go here. Here's 21 days out, and I'm going to sell just a roughly a 20 delta put, right? Does everybody see this? Everybody see what I'm doing? 21 days out, that's March 20, and I'm going to sell a 370 put. It's going for $3. And let's see what we find here. Can everybody see this? It's a 370 put. Can you see my annotation where the credit is? Can you see my annotation? So I'm bringing in $340 credit. I'm selling a 20 delta put at 370. How many are comfortable with what the 20 delta means? 20 delta means I sold 20 delta put at 370 with the underlying at 393. If we don't go under 370 in the next 3 weeks or so, right? I collect the $3.40 credit. The 20 delta means there's only a 20% probability we'll finish under 370 in the next 21 days, right? So I'm selling it. That a lot of good news. Probabilities in our favor. Seems like a good credit. The margin is, what do you put up for a margin on a cash secured put? Basically, pretty close to the cost of the stock, 39,000. Except VS, we're bringing in a credit of 335, 340. So our margin is going to be the cost of the stock minus your premium. Does everybody get that? Roughly. This is in a retirement account. I'm not talking in a leveraged account. Is everybody with me? I'm not talking in a leveraged portfolio margin account or a leveraged account, but in a retirement account, you'd have to put up the total amount to buy the stock. Am I correct? In a retirement account? Yes. Yes. Right. And so the question is, well, what's the yield? Right. Let's say I make $335 divided by $36,000 or so. Your yield is 0.009, right? It's just you're chewing up a lot of capital. Can you buy double calendars in a retirement account? Yes. Now, so my alternative is saying, look it, come on, right? Look, if we go to the chain, I don't want to put up $33,000. I sold a put for 330. Take 10 to 20% of that, right? So go in and buy a put. Let's just say I took the 340, let's say the 340 put, right? I buy a 340 put for 68 cents. You with me? So instead of getting $3.35 on the put, but I have to put up $36,000. Now I'm in a put credit spread. And let me go back to the chain. How many can see? Can anybody notice what's the delta I'm buying the put? Can you see that? What's the delta I'm buying the put here? Let me say it in Swedish or Somalia. What is the delta of the put? This is delta. Can you see that? 5. See that? 0.05. You can double left click on your screen if it needs to be bigger for you, but it's 5, right? So it's a 5 delta, right? So now, so the question is, would you rather bring in a $335, right? But put up $36,000 or so, and you can divide it. Or B, the most we could bring in is 267 on a risk of $2,700. Does everybody see that? Would you rather do A or B? Bring in $335 and 36,000 or bring in $267 and 2,700? B. usually, right? Is the winner, right? And so, I mean, now I'll talk more next week. Ultimately, is this the credit spread I would do? No. Why am I talking about this? This is one that the people, because let's just say somebody said, Dan, I don't mind getting assigned, but I like the fact that, I might go 6 months without being assigned. I'd rather put up $2,700 versus 33,000. If you get assigned on the short put, right? And so let's say we're at 393 in Microsoft, we might go to 365. The probabilities are very, very low. We'll go anywhere near the put, the long put. Why? It's a 5 delta. It's only a 5% probability we'll go that low. If we were to go that low, these puts would grow. We'd be fine. So in most situations, if you wanted to get assigned on your put, get assigned, this would just go out worthless, but you're not paying much. Do you see that? This is just trying to get a comparison between the two. Does that make sense? Any questions on that? So you're just putting a little bit of that. Now, um, and most of the time you'll just, each month you would do a new put credit spread, adjustments, and we could talk about next time you could roll, there's different ways you can adjust this, but wouldn't you agree the question on adjustments would be, do you want to get the stock, right? If you don't want to get the stock, right? Or if you don't want any stock, you could roll this, right? How many do stuff like if they're short a put or a put credit spread, they'll kick the can down the road? I don't like that type of thing, but many people do. Say, Dan, what does that mean to adjust a put credit spread by kicking the can down the road? It means taking this put credit spread. If we go down, I'm short the 370s, long the 340s. Maybe I'll go from 21 days, go out 7 or 14 days more and resell a put credit spread farther down. Maybe close this one and sell one farther out, lower down. Does anybody ever do that? When your short puts or a put credit spread, kick the can down. What would you call that? It doesn't sound as dignified when I say kick the can down the road. BWZ, what do you call it? Rolling. Okay, that's more dignified. I roll it out. Yeah, and that's one way to do it. But I just wanted to leave you um, with this. And so next week, I'll focus just more on credit spreads, maybe 2 or 3 different ways that I do credit spreads. But at least we have a starting block here. Any final questions or things while I have this up? Is it correct to say you would only get assigned if the price is below the short put but above the long put? Um, is it correct to say you would only get assigned if the price is below the short put? But yeah, in most situations, but yes, I can't. Yeah, I mean, anything can happen, but I'd say a 95, 90, whatever percent. And again, remember, I want this long put, right? You know, I want this long put, right? What if we have a nuclear attack or something and the market gets destroyed? Will that long put be your best friend in the whole world that night? Well, if it goes below your long put, um, you'll have your max loss. Yeah, but let's just say, Sanjay, if it goes below your long put, let's say you didn't have that put at 340, you sold the 370 put and you go below 340, you're on an oxygen machine. Am I right? If you sold the 370 put and we're below the long put, um, and you just had the short put, are you in a worse off situation? Yes or no? Yes, right? But you did but the long strike. So you're saying the long strike would hurt you if it went down a lot? Or it'll help you. Oh, you get your max loss on a spread. Yeah, and any put credit spread, if I have a put credit spread, your max loss would be, yeah, below the long strike. Yeah. Yeah. But it helps a lot. But the key is, and we'll try to do some situations next week. Do you want to be short do you want to get assigned on the short put, or if you just want to do the put credit spread? But again, I think just as an alternative to a cash secured put, and then we can talk about this, all we're saying is by you spending $50 to $70, you can cut your margin from 36,000 to 2,700, right? It's an absolute no-brainer, right? No-brainer. Absolutely no-brainer. Um, Again, I would encourage you, if you had a chance, if you wanted to just learn more about kind of what Matt was talking about and get the modeling tool. Again, um, we put the link in the chat earlier. Uh, you can get the modeling tool for $15 a month. Try it for 3 months. But at least to me, what makes it great is for the modeling tool, now you can go in, see everything in the Discord, get used to the uh, back testing and everything, and learn it. I think it'd be uh, great. So, anyways, if you have any other questions, you can send me an email, dan@sheridanriskmanagement.com. Any questions that you have as I'm speaking, throw into me and I will cover them next week. Um, Now, this series, when you say series VS, you mean just like next Friday? Yeah, that just, you know what, Will, that's just Sheridan Risk Management, and we'll send out a if you've got the information for today, right? If you're in the database, we'll send out an email probably Monday or Tuesday saying, hey, part two, now we'll get into this is what we'll go over, and so you'll get it. You don't. Uh, we'll send an email out to you from us. So, all right. Well, folks, have a nice day. Have a nice weekend. Uh, and we'll see you next time. Appreciate it. Thank you. Oh, Matt, anything? Matt, are you there? Oh,
I'm still here.
oh,
Yes,
sorry, Matt.
that's
Matt's,
okay.
Matt's busy. Anything else? Any other question? Any other questions for Matt? Anybody? If you have any other questions for Matt, but next week I'll be on, and I will, depending on Matt or Troy's schedule, uh, we'll try to get one of them on here next week. So thanks, everybody. Have a nice weekend, and we'll go from there. Thanks, Matt, for all your help. Appreciate it.
Thanks, Dan. Take
Thanks, guys.
care.
All right. Thanks. Bye bye. Thanks.